Yeah, so I've started the recording, and for anybody that maybe wants to like see a recap of this video or any of the other videos that we've done in the past, we do have a YouTube channel as well. Carmelo, if you want to go to the next slide, it will show people about that.
Well, so first, I want to thank everyone, Alex, with regards to for your patience with technical glitch and joining our webinar tonight. Tonight we're going to be starting about how to get start investing in real estate.
Yeah.
Myself, my name is Carmelo Boutis. I'm a mortgage agent at yourmortgageyourway.ca. If you have any questions when it comes to like mortgages, financing, interest rates, I'm the guy to talk to.
Yeah, and I'm Alex Zhvanetskiy, Toronto Realtor. With Remax Condos Plus, there's a QR code there as well, and we'll kind of be sharing some of our contact information, as we go through here. So I think that like maybe the first thing I'll just kind of briefly share is our Instagram handles, and like I mentioned, we do have a YouTube page as well, where we upload these videos. So maybe I'll share the YouTube page first.
So if you ever want to, for those that join us, if you ever want to take a look at any presentations we did in the past, feel free to check out our YouTube channel, see the presentations we did in the past, and if there's any interest you have with regards to a future presentation you'd like us to do, at the end or sometime in the middle, just drop us a comment through either Meetup or even tonight with regards to something you'd like to learn, and we could make a presentation specifically for what interests you.
Yep. Okay, so just a little bit about some legalities. So this is not tax or investment advice. We're just going to basically be sharing our own, personal experience from our own investment journeys and also from working with clients. So do your own due diligence. This is kind of just for entertainment purposes only. Everybody has their own goals with investing, so make sure that yours align with your comfort level and you're doing only things that you're comfortable with and doing your own due diligence as well.
So Alex, why are we talking about real estate? Why are we looking at investing in real estate?
Well, first of all, I mean, this is a real estate focused group, but when we talk about different investment vehicles, I mean, there's different ways that people can make money. Of course, like whether it's investing in stocks, mutual funds, gold. But real estate is, I think that especially in our market, in the Canadian market, and just like the North American market in general, is the way that probably over the last 20, 30 years, most people have accumulated the most amounts of wealth. Like countless books have been written about this, starting from Rich Dad, Poor Dad. Real estate is a basic human need. There's scarcity of real estate. Only so much can be built. Canada has a very strongly growing population. This is something that is a basic human need, like I mentioned, along with food, water, and shelters is what we all need. And this is a great way for people to diversify their investment portfolio. It's definitely should be looked at as a long-term investment, though, and probably one of the best ways to create generational wealth.
I agree with you, Alex. When it comes to real estate, I can't help notice that I'm talking about like the ultra rich, all of them own real estate, and they don't have a principal residence. They own multiple properties all around the world, and over time, real estate values go up, right? So real estate is something; it's a long-term thing, and for myself, I would know if I want to do something if I want to do something, and I want to be, for example, rich or successful or financially stable. I'm looking at what the people who are financially stable, those who are rich, what have they done? What are they doing? The difference is bring it down to our scale, right? Yeah. The one thing with real estate, it's an asset class on its own. What it could do is it could help shelter your money. It helps shelter your money from inflation. So as prices of items go up, or food, gas, groceries, and appliances and everything like that, so does the housing. So does the house. Right, so real estate is a way where, as there's inflation, there's always been inflation. It'll constantly go up, and the one cool thing with real estate is it's leverage. So you can, if you're buying an investment property, you can put a little 20% down payment, and we have an example to show you, like with regards to that little down payment, how much money you could make from it.
Yeah, there's three ways that people make money in real estate: appreciation, cash flow, and the mortgage being paid down. I did kind of include something in the right there, this image that kind of talks about an asset class and what a true asset is. And like Robert Kiyosaki said, and Rich Dad Poor Dad, and a lot of other real estate investors have said, in most cases, unfortunately, people's primary residence is not an asset; it's a liability. While an asset is something that puts money into your pocket, such as an investment property. So I'm not talking against people owning their primary residence. It's not what this presentation is about, but it's about how to, be able to do something like leverage the equity that you have in your primary residence to continue to grow and build your wealth. In the last 23 years, real estate in the Greater Toronto Area has grown on an average of 5 to 10%. Now, in the last year or two, we have seen a decline from the peaks of 2022. There's been probably about a 20% decline, but we are seeing that kind of slow, sustainable growth increase. And a lot of those stats, like when you're watching the news and you're hearing about real estate prices decline, they usually kind of average it amongst all classes of real estate, and a lot of this is focused on condos, while freehold properties are something that continues to be in demand. And something that's scarce. Like I had a client that kind of asked me this question about whether he should, buy a freehold property, like a semi-detached house in York region, or if he should buy 2 condos in North York instead. And my opinion on that is that while he may get more rental revenue from those 2 condos, or maybe it would be the same, but maybe a little bit more. The fact that he can buy a freehold property instead of that, he's probably a lot better off with that, because we do have like municipalities, for example, Richmond Hill, that doesn't give any more permits for single family homes. So the GTA is moving towards a very vertical real estate model. So that's all I really have to say about that. Carmela?
So one thing with when you own real estate, everyone thinks about the income, and you got to pay taxes on it. It's like, well, you have to keep in mind you're also going to have things that are tax deductible expenses when owning investment property. The interest you pay on your mortgage is tax deductible. Any improvements you make to the property, if you have to change the furnace, if you have to change the driveway, if you want to add a deck, the property tax you pay every year, the landlord insurance policy you pay every year. When you buy the property, the legal fees, again, when you go to your accountant, the accountant's going to ask you how much rental income did you receive? You give them the numbers. Then you have a whole bunch of different expenses, right? The cost when you use a realtor to help find a tenant, the realtor fees, like there's a whole bunch of different expenses that kind of offset the revenue.
Yeah.
Right.
Also, like depreciation of equipment, even driving to the property. But I think one like really interesting thing about this, Carmelo, is that when somebody owns real estate, these expenses like can also help them reduce their personal income bracket as well.
Well, yeah, if you have your expenses are larger than your revenue, then you have a loss. That loss could kind of, this is where the accountant's going to go in, but I know the accountant's done with mine, is that small loss, all of a sudden that my actual income, my salary. So my rental property had a $1,500 loss. Well, I'm getting a little bit bigger refund because of that $1,500, right? So, with investment properties, I like to focus on more cash flow positive, or at least cash flow neutral. And we're gonna show an example with that. The important thing is it's not a matter of like, oh, I got a property. You get, depending on what the property is, you got $2,500 per month or $3,500 per month rent. In a year, you're making $42,000. I got to pay taxes on that. No, you don't, right? Because you have expenses offsetting it.
Yeah.
And this is an actual example we want to share with you. So, yeah. Alex, you found this property.
Yeah, I'm actually going up there tomorrow. So it's for an active client that I'm working with. It's a duplex in Barrie. For those that I see that Wayne is joining us from another continent. So this is something that's about 75 kilometers north of Toronto. It's not the Greater Toronto Area, but it's kind of like a second tier type of city in Ontario. A lot of people that work in the GTA live in Barrie. So yeah, so I found this duplex for my clients. So for those who don't know, duplex is basically two fully contained units in a home, and this is being advertised as a legal duplex as well. So it's been on the market now for about 63 days, and the price of $699 is the real asking price for this property.
So let's kind of look at some of the numbers when it comes to this property. Would it be considered a good investment property?
Sure.
Well, with this property, you're buying it for say $700,000. You do have to put $20,000 for down payment, sorry, 20% down payment. So your mortgage would be $560,000. The rental income for one unit, let's call it the upper unit, $2,000 per month, which is $24,000 a year. The lower unit, the rental income $1,600 per month, just $19,200 per year. Your mortgage payments, when you analyze your mortgage payments, the payment is both principal and interest, is let's just call it $34,000, and the property taxes are $4,400 per month. I mean per year, not per month. That would be way too much. At the end of the year, this property would cash flow $4,557. It's cash flow positive from day one, which is pretty cool. This is why this is a great investment property, because investment property, what we want with them is we want them to give us money. We want to have profits to use to either put into the mortgage, to put back in the property, or put in savings for future expenses.
Yeah, and one of the key things is, like, I completely agree with you, Carmelo. Like, cash flow, like, even if you're cash flowing $100 a month, right? It gives you, like, it's not about that living off that $100 a month. It's about having control over this property. That if things change, the situation changes, or if you basically don't have to sell that property. You can pick what type of market you bring that property to for sale for when you do choose to sell. You're not going to be in a situation where you're forced to sell in a down market. That's ultimately what it shelters you from. Because there's a lot of swings. Like, if you look at 2 years ago versus where we're at today and where we're going to be 2 years from now, you don't want to be forced to that just because the interest rate went up a little bit, or there was some other situation as well.
Well,
for this example, did you put 20% down?
Yep, 20% down. What I did also is, like, what would happen in 5 years? Like, let's just say we're not getting that appreciation that we had in the past. The one thing with real estate is I noticed there has not been a period in time that I found in Canada and in the Greater Toronto Area where over 10 years the value has gone down. Everyone who's bought at a peak 10 years later always gone up. But in this case, we're going to say, let's say the value only went up 50 grand, right? And the value now is went from 700 to 750. Well, the one thing that's a guarantee is that mortgage balance is going down. After 5 years, your mortgage balance is, just under $510,500. Rent right now, you could raise rent by 2.5% per year. And again, I just figured, let's be a little conservative. Let's say rent goes up 2% per year. Your expenses go up even faster, but let's say your property taxes go up 4% a year. The interest rate went up by 1 full percent from today, right? Well, what would happen? And in this case, you can see that cash flow actually went up. So let's just say things were a little worse. Let's say the mortgage interest rate went up by 2% instead of 1%. On an annual basis, instead of that payment being 34 going to 37, it's going to 40. You're still cash flow positive.
Yeah.
Right. So this is great. There are opportunities out there.
Yeah. And that's one of the things that I know we talked about this, Carmelo. Like, when we were preparing this presentation, we're talking about, what are kind of some of the ways that we look at picking properties. And one of those was, and I know we'll talk about this in a couple of slides, but, like, can we survive this? What happens in a like a bad scenario, right? Will we still be able to carry this property? What if we have a situation where maybe a tenant leaves and then we don't have a tenant for 2 months while we're finding one, right? Can we still sustain this?
And the answer, I think, is going to be yes, because if you're cash flow positive, you're going to every month that bank account, again, everyone has their own little strategy. I always like to have at least 6 months worth of expenses in that bank account with my properties, because, again, like you said, Alex, if the tenant has to move out and it takes 2 months for a tenant to go in, you want to have that cushion. And when you're cash flow positive, using that someone else's money to give you that cushion, so it doesn't impact your everyday life.
Yeah, I think where a lot of people found themselves in trouble, like over the last 2 years, and like if you follow me on TikTok or Instagram, you see I post videos like, oh, this house lost 20% in value over 2.5 years, 3 years, whatever. Is that, people kind of had this approach to real estate where they thought that values are just going to continue to go up, up and up, like through the roof, like this house that's $1 million, like in 2022 is going to be like $2 million in like 5 years. Well, that's not sustainable. That's not the way the markets work. Like everything fluctuates, goes up and down. And, I think that the approach is that you need to buy with, just like solid fundamentals and math, and not with FOMO and emotions.
Exactly.
Yeah.
So when it comes to, again, as you need larger down payments, if you are currently a homeowner, the most common thing I see is people refinancing their existing property, right?
Yes.
To get that equity, that down payment to buy the new place. So how does it work? Here's a good illustration, and we try to keep it as simple as possible. Let's just say your home or townhouse or condo is worth $500,000. That's the kind of like the number at the top. And your current mortgage is only $220,000. Well, you could get a new mortgage, you could refinance this property up to 80% of the value. So if the value is 500, that means a new mortgage could be 400,000. As your current mortgage is currently 220,000, that gives you $180,000 that you could use to buy an investment property.
Yeah. And basically, this scenario here is a very realistic scenario. Like if anybody's lived in, like, owned their primary residence for 10 years, they have equity in that home. And if you're just letting that money sit there, you can pick to do that, but you can also take advantage of the current market. You can let that money work for you. If that equity is just staying in your home, it's essentially just dead money.
It earns you
That's
nothing.
all it is. Yeah.
It earns you nothing. But if you have 180,000 earning you 5,000 per year every year, that's not too shabby.
That's not too shabby at all, my friend.
So again, how do we evaluate properties? How do we look at what's a good investment property? What's a not so favorable investment property? Let's just call it. What are the things we need to look at? So one thing is the sector. Like where is the property located? The sector, or what are the current employers, and what's the jobs like in those markets? Alex?
Yeah, educational institutions, that's huge. It depends really on the type of property you have as well, right? So, one thing that I used to be a proponent of, being able to drive to the property that I own. So I was kind of like looking, first in Toronto, and then when Toronto got expensive, I was looking in places like Barrie, Waterloo, Windsor, further and further out. But these places stopped making sense. So in 2021, I started investing out of province in Alberta. And it's actually been something that was, quite good for me, because having that, the property be not within my reach, having to hire property management. Like sometimes I forget that I even have these properties. I just, like, money goes in, goes out, pays property management, and it's very, very hands off. So that's something that's really good. I think that cash flow is important for the reasons that we talked about before. So you want to be able to sustain kind of like the worst case scenario, like we mentioned in the bottom point. Like, what's the worst case scenario? You buy this property, maybe it has no tenant, maybe it takes you 3 months to find a good tenant. Do you have a buffer? Are you leaving yourself? I never recommend for people to be like buying at their max. Make sure that you have, like Carmelo said, several months of expenses. And one other point that I want to kind of mention is the landlord laws. So I think that for the most part, most tenants are good people. They want to pay their rent and they don't want to have hassle with their landlords. But unfortunately, we do hear constantly in the news, especially if you're in Ontario, about tenants not paying rent, and it's becoming like a nightmare to evict them. Unfortunately, the news is kind of like fear mongering. Like, they don't report that, hey, 99.9% of tenants paid their rent on time this month and everything is great. They're reporting on that 0.01 just to kind of get attention. But make sure that you understand the landlord laws. Like, maybe if you are not like not everybody can kind of like understand how to apply it. So make sure you at least have resources to people that do understand them, or look in kind of more landlord favorable provinces as well. Like Alberta is very landlord friendly. It's a lot different um, than Ontario, but it's not to say that you can't operate in Ontario. You just have to know kind of like the way to do it properly, because a lot of times when I talk to clients about bad experiences that they've had with tenants, and we kind of have that discussion, they kind of were winging it and going through it themselves, and then just some red flags go up, and just situations that they could have avoided or gone about differently had they made the phone call earlier before shit started hitting the fan, and maybe we could have kind of guided them and avoided that situation altogether. I see that Mia does have, or Maya or Mia, sorry, I see you have a question in the chat. We're gonna answer that at the end, if that's okay. But yeah, anybody who has questions in the chat, just feel free to share them. I also pinned our Calendly link as well. So if there's like something that maybe you want to ask offline, or if it's a little bit too complex for this presentation, then you can also just book a call with Carmelo or myself, and we're happy to have that discussion with you as well.
So when it comes to evaluating properties, again, you got to look at the properties, the market, the city, the rules, the laws, and find something that meets you. I was raised with regards to have the property next door. I live in Mississauga. My rental property is in Barrie. I have to drive over an hour. It's not something I could do on a regular basis. Alex, you live in Toronto and you got investment property in Alberta, right? You don't always have to buy one that's down the street. It doesn't always have to be, it's okay to have one that's drivable, where you could drive and do the things, and it's okay to hire property managers or hire realtors to help you find tenants, because I don't want to be driving every time I have to find a new tenant. Hiring professionals to do the work for you. This is an investment. Treat it like an investment. Think like an investment.
Yeah, treat it like a business, basically.
Yes, this is a
like
business.
Don't treat it like, don't treat it like you have to be doing everything. In fact, you probably want to do as little as possible.
You want to be involved and in touch with what's going on, but small minor things, again, having property management to handle the small things is peace of mind.
Yeah.
So where are the opportunities today?
Well, there's a lot of different opportunities, right? Like, I mean, I started off 2024 talking about assignments being the best opportunity, especially in the GTA. But today it really depends on the marketplace. So like if you're in the Greater Toronto area, I think the best opportunities are resale condos, because that's where the market has hurt the most, and the most appreciation has gone down. So I think that's the best environment. But it might also be like if you're a contractor, you maybe want to buy properties to fix and flip, or buy a lot and build a property on that. You may want to use the BRRRR strategy, where you basically buy a property, you renovate it, you rent it out, you refinance that, and you basically force appreciation on that property. Maybe multifamily is the way to go. Maybe power of sale. It might be in Alberta. There may be opportunities doing short-term rentals, depending on the municipality. Make sure you know the laws. But ultimately, where is the opportunity? The opportunity is where you take action and you create it. There's lots of different opportunities. Just depends on what is actually like your investment style and what you're hoping to achieve here.
That's exactly it. When it comes to opportunities in real estate, it's what do you want? What are you looking for? Are you looking for high cash flow? Are you looking for a lot of appreciation? Are you, like you said, are you a contractor? Are you able to do the work yourself versus hiring someone to do renovations, right? You create the opportunity that you're looking for.
Ultimately, opportunities, like, you have to create action, and you have to be out there actively working with professionals, making offers. We're gonna play this video. This is something I think off YouTube, but I shared this on my TikTok and Instagram earlier as well. So I'm just gonna shut up for a second, or a minute and a half. So opportunities like the one that I posted yesterday, they don't just like fall into your lap by sitting on the sidelines. They are created by you, by actively being engaged in the market, being out there, looking at properties, putting in offers. That's how you make those opportunities yourself. Sitting on the sidelines, waiting for it to fall into your lap, that's just an excuse for doing nothing and not taking any action. And you're not gonna just like have an opportunity come and punch you in the face. When that good chance to get a property at a good price comes along, you have to be able to pull the trigger right away. You have to make sure that you have your financing lined up.
You need to make sure that you're comfortable with the condition of that home. Generally, on those really good deals, you can't put a conditional offer. You have to make sure that if you need a home inspection, you're doing that before you're even submitting an offer. You have to make sure that you're having your financing in check before you're submitting that offer. They're not going to be reviewing that. Like, for example, if you come across a power of sale, you can't make that conditional on anything. And that's where those good opportunities are. And you have to make sure you're working with professionals. You're also committed to those professionals. So they're actually going to be, sending you those listings. With the good listings that come across, I'm not going to be sending them to people on TikTok that tell me, send me a good opportunity when you see one. I'm sending that to my active clients that I'm actually out there, working with, and I know that they can take action and do something about it. Anyways, happy Monday. Take action, make opportunities happen. Have a beautiful week.
I love that, Alex. Like, again, that's perfect.
Yeah. So it's basically, like I posted a like a TikTok video.
So opportunities like the one that I posted yesterday, they don't just like fall into your lap by sitting on the.
Apologies. There we go.
There you go. So I posted a TikTok video. It was about a detached home that sold in Mount Dennis, which is like kind of like Black Creek, Eglinton and Black Creek area, for under 800,000. And I had some people that reached out to me. Like I have people that reach out to me on a regular basis, like, hey, next time you see something like this, send it to me. Or, I'm looking to invest in real estate. When you see a good listing, send it that's not the way that it works. Like opportunities like the one that I made this video about, or the original video about, is like it was created by somebody themselves. Like they went out there, they put offers on different properties. They had a number that they were working with. They finally basically found a seller that was motivated enough to go with that offer. And, that's how they got it. Like, I worked with several clients in the end of 2024 where we bought power of sale properties for them. And power of sale is basically the bank is putting that property on the market because the property owner is unable to pay their mortgage, which is an unfortunate situation, but it's a good opportunity for some people because usually they're being sold under market value. The bank just wants to get rid of that property. But when you're doing a power of sale, like you can't make that offer really conditional on anything because the bank is not going to be able to, is not even going to review it. You have to basically know how to approach that. You have to have a legal team that knows what they're doing. Like I had one client where, when we sent the agreement to their lawyer, I'm not going to get into particular details, but the lawyer basically almost blew up the deal because she was inexperienced working with power of sales. I then had to redirect them to my lawyer, who had to, assure my client about what the tax implications of buying this property would be. And everything ended up working out. But it's basically, if you have the wrong people that don't really understand what they're doing, or you're just kind of passively on the sidelines, you're first of all going to miss opportunities, but you have to make sure you have the right team for what it is that you're trying to achieve. But ultimately, you yourself are comfortable with that as well.
Yes. And again, the key thing is, I like that video, is you have to go out there and you have to be ready for it. Opportunities are available right now. We just showed an example of a duplex that's cash flow positive, that's been sitting on the market for 60 days. But people don't realize how those numbers work. Alex and I do, right? So we see this as like, oh my God, this is great for our clients. You know what I mean? Like, let's jump on it because it's cash flow positive. It makes money. In the future, the worst case scenario for us to go even higher than what they are today is still cash flow positive. You got to be ready. If you're ready, want to make an offer, do you have the 5% down payment? Do you have $35,000 ready? Or do you have to wait a week or 2 weeks because you got to liquidate a stock or something like that? You're waiting for a stock to go up or Bitcoin to go a little higher. Like, you got to be ready.
20% down payment, Carmelo, not 5% down payment.
No, the deposit. If you're making an offer,
the deposit.
Yeah. I don't know if I said down payment, but it's the deposit. When you buy a property, you have to put a deposit down.
Yeah. So anyway, so basically, yeah, like you create those opportunities yourself. You have to be actively out there looking at them, not like, looking at listings on Realtor, hoping to, spot something. Because a lot of times what you see is like it's already sold. Kevin will approach your question at the end as well.
Yeah, we're almost there, right? So
we're almost there.
You mentioned it earlier, right? With regards to like when you're working, you need to know you're working with the right people, right? You got to have your finances in place. I know I could help you with that. Alex, you're a great person and a source to work with when it comes to finding deals, right?
Mhm.
We're real estate lawyers. We both have access to lawyers that know the business and especially know how to do power of sales. I'm surprised that experience you had.
Yeah.
And you got to have an accountant that knows how to help you with regards to like all of a sudden anything and everything that's tax related on investment property, right? You can't really have that do it yourself software online to do your taxes. You may be missing other things. You may want to hire an accountant to help you with that.
Yeah. Keep your money.
Yeah,
Learn how to keep more money at the end.
exactly.
Yeah.
So the long-term benefits with real estate is pretty self-explanatory. Like if you're buying a property, you're only in for 25 years, you're gonna have a tenant that really pays that mortgage down, and then you own a property that's free and clear, right? You got properties that are cash flow positive that keep on increasing. Where the cash flow keep on increasing, the longer you own it. And we just showed a good example, right? And the long-term benefit of real estate is, again, it helps create wealth over time, and it's something that could actually be passed on to future generations. So if you got children, you're thinking about your kids, how am I going to help them out in their future when I pass away? Real estate is something you pass on from one generation to the next. And I can't help notice a lot of the really wealthy people, that's what they do.
Yep. Sounds good, Carmelo. So I think we're near the end of the presentation. Yep, uncertainty is the friend of the buyer of long-term value. So this kind of just also goes with like power of sale too, a little bit, right? Because there is some uncertainty when it comes to certain types of transactions in real estate, especially if you don't know, like if you don't have the right people advising you along the way. But that uncertainty, which scares away other buyers, is what creates opportunity for you as a buyer when you're working with people that actually know how to navigate you through it.
I think there's a lot of uncertainty right now with future tariffs coming in place. People are afraid to get into the market because they're afraid of what may happen in the next 6 months. Because real estate is such a long-term thing, I don't even remember a period of time over the last 20 plus years doing mortgages where there has not been a time of uncertainty,
Yeah.
right?
When everybody's selling and running away, that's the best time to be buying.
Exactly.
Yeah.
So
we do have a Facebook group as well. We're kind of shifting a little bit out of the meetup community. Probably over the next year or so, we're going to be shifting more towards our Facebook group. We're going to be starting to do our webinars live on Facebook as well. I did post a link to that group in the chat. Posted a couple of things in the chat. I posted a link to our YouTube page. I posted a link to our Instagrams. I posted a link for anybody that wants to book a call with us and kind of discuss any of this. So it's all posted in the chat for you.
thanks, Alex.
You're welcome.
Now, a lot of questions out there. So I'm going to stop sharing my screen and kind of go through it and help answer the questions you have.
Yeah. So I think the first question was about financing from